Hi, I'm John Burdett with Fourth Avenue Financial. I wanted to talk to you today about our article I just wrote, Is a Stock Market Correction Near? The media right now is full of scary reports about stock market declines that possibly are on the way. There's a lot of volatility in the market. And I wanted to give you guys some perspective on what a stock market correction is and what it means for you. So hopefully moving forward you'll have more confidence in your financial plan and be able to move forward without making emotional decisions. First of all, a stock market correction is defined as a 10% market drop from its high. And certainly that does sound scary, but it does happen very frequently. Since 1950, the market has pulled back 10% or greater about every 18 months. And it's been since 2011, summer of 2011, since we've had a market correction. So, you know, a lot of folks are thinking that it may be time for another one. The problem with that is nobody really knows when the next stock market correction is going to be. If we all knew that, we'd be out of the market when they happen, but it doesn't work that way. The media talks about it because of the volatility and because it has been a little while since we've had one, but the fact is nobody really knows. I saw Warren Buffett, who most folks say is the greatest investor of his era, if you will. He stated on TV recently that there have been 5 times in his career that his stock, Berkshire Hathaway, has fallen 50% from its high. Now I ask you, if Warren Buffett himself couldn't predict that type of decline in his own company, can the media? Who can? And I would say that nobody really can. So then the question becomes, how do we deal with those inevitable events that happen? So if market declines and market corrections are unpredictable and unavoidable, what can you do to deal with them? And I think the first thing you need to do is make sure that you have your emergency funds intact. You should have 3 to 6 months of your spending needs in cash, in short-term safe investments not tied to the market, so that when those market declines happen, it doesn't affect you emotionally and you aren't forced into selling investments at an inopportune time. Keeping that emergency fund intact will help you stick to your long-term plan. That's a must. Second, I believe it helps to know and be comfortable with the businesses that you own shares in. If you know the businesses, you're comfortable with the businesses, when the market declines, as it inevitably will from time to time, you're much more likely to stick with those things, and you're also much more likely to view that as an opportunity. Lastly, it's important not to make long-term decisions on short-term events. After all, remember, if you sell your stocks because of the correction or because of the downturn, you have to know when to get back in. How will you know when to do that? I have many clients that sold out in 2008 when the market was at its worst and were afraid to get back in, and we've seen the market more than double since that time. So that poses a real risk to your long-term investment plan as well. Knowing that corrections are a normal part of the investment process should help you keep your eye on the long-term goals that you've set for yourself. Clear, unemotional thinking can help you deal with those declines and possibly help you spot the opportunities for the next market rise that will also be inevitable.